Morning, everybody. How you doing? Morning, Mark. Morning, Andy. Just having a quick look at my oil. We had a gap up on oil this morning. We had a big pullback yesterday on everything, which was lovely. But oil pulled back quite hard. I got into another position down there because it filled that gap, basically. We did a gap fill. I wasn't expecting it to do that gap fill, but it did, which is nice. But yeah, so I got into another position on the gap fill last night. Gapped up again. So hopefully today we can gap down and then shoot off for new highs. So yeah, big $1 a barrel. Not good. Morning, Mayo. Morning, Harry. Michael. Yeah, so lots happened yesterday, obviously. We had big moves in the market. Massive ADR days. If you're in the Telegram group, some people don't quite understand ADR. But anyway. So yeah, we had big ADRs yesterday. Which is a measurement of the average daily range. It is not a signal indicator. It is not to tell you to get into the market. It's just telling you a market condition has been exceeded. Anyway, so yeah, big ADR day yesterday. Possibly going to get something similar today as well. Just keep very tight on things at the minute. We've got weekly ranges hit all over the gaff. Some massive monthlies, especially Euro Swiss. Euro Swiss done an absolute stormer this month. But yeah, so ADRs, we've got a few hits already this morning. We'll go through those in a minute. And we'll have a look at the RSIs as usual. Kick off with what happened yesterday, trading wise. Really good day yesterday. The EA had a really good day. I'll show you the strategy quant results as well in a minute. Oh, that thing absolutely steamed it yesterday. It was amazing. So cop bias EA have with H4M15 made 5% yesterday. Obviously, yesterday was the first day I turned it back on again. It was turned off for a week basically. 1.2% drawdown at the moment. Got a few pound longs on and a couple of positions at the minute. So, but yeah, lovely trades yesterday. Euro yen. I won't go through all of these, but yeah, Euro yen, pound yen, Aussie CAD, New Zealand, Aussie Swiss, Aussie US, all one hits mostly yesterday. So really good there. Trend pullback strategy yesterday had a good day as well, mainly on the yens. So I did 3.4% on that. Got just about break even at the minute on it. On the other positions which are open currently. CAD yen, nice little trade. Zoom in so we can see what we're doing. So straight in and out on that one. Pound yen as well. Took 2 positions on that one. No, sorry, 3 positions on that one yesterday. So that one all was quite nice. I mean, that's textbook. That lovely spacing and straight out on the pullback. So this is a prime example of what I keep going on about in here day after day after day. Sellers entering the market, selling hard, getting to a position where they can't sell anymore and taking profit. 50% retracement on the move. Textbook. So yeah, took that one. US dollar Swiss. That was a trend pullback. Just straight in off of the alert. Straight out. New Zealand dollar Swiss as well. I won't go through every single one, but yeah, and pound New Zealand. Pound New Zealand, 2 positions. I think that one closed out early. Yeah, so we looked at those ones yesterday anyway, didn't we? So yeah, good day there. H4M15 mean reversion, 2.67%. Got 0.6 in drawdown at the moment. Pound yen, pound New Zealand, Aussie CAD, same stuff pretty much. And H1M5 did 2% on that as well. The only thing I've got on at the moment is pound US dollar, which I'm not liking much, but I'm going to keep an eye on this one. So pound US dollar, obviously, got a second position on it. Didn't get a third because the reversal alert was too high. When we got the alert, it was too close. So it didn't take a third position. If I had taken a third position manually in New York yesterday, I'd have been out of that already. But I didn't. So it got into profit this morning. Well, not it got into profit, but it got into sort of near break even this morning. And we've pulled back down again. So going to see what happens with the New York open today and with the dollar. We might get decent movement actually in London on that. So we'll see what happens with it. Oh yeah, strategy quant. We'll have a look at the news in a minute because we've got some news coming up on the US dollar today. The strategy quant EAs, this is the 100 set that I've got running, made 26% yesterday. So done 18% this month since I started this test, which was when did I start this? December. Yeah, beginning of December. So where are we? December. So all of December, all of January. So in nearly 3 months, it's returned 33%, 10% a month off of that set, which is great. But obviously, a lot of that was done yesterday. And you're going to get that with any kind of EAs that you're running, which work on stop losses. You're going to have constantly, bad runs, and then the market conditions will turn in your favor. The strategy will work, and then you'll have bad runs. The market conditions will turn in your favor, and the strategies will work. It all turned in our favor yesterday, and they all started working, which is lovely. So, and I still got 2.6% running at the moment. And the other strategy quant EAs, the other 50, generated 10% yesterday. These haven't been running as long. We started these at the end of January, so these have only been running for a month. Is that right? Yeah, 1st of Feb was the first close. So yeah, end of January they ran. So only been running a month, break-even month basically at the moment. So not too bad, but yeah, banked a nice 10%. There. So you're going to get spikes and things on these strategy quant EAs. This is why they're long-term investment portfolios. They're not designed to generate a monthly return. They're designed to generate an annual 200 to 300%. So, but yeah, going really well. So good day yesterday across the board. Lots and lots of movement. Excuse me. We'll have a quick look through everything in a sec. News-wise today, we've got this afternoon. We've got PCE at 130. That's what I mean by looking at the New York Open for the US dollar, because I think we'll probably have a fairly... it's difficult to tell at the moment, but I think we'll probably have a fairly flat US dollar this morning. It'll all move this afternoon. We've got Lagarde speaking as well, which was unscheduled. So she's just been scheduled to speak at 3 o'clock. I'm not quite sure what that is about. Whether that is to do with potential banking sanctions that may be coming in against Russia. They're talking about taking them out of the SWIFT banking system. So it could be possibly to do with that. I don't know. But it's an unscheduled talk. So that's been slotted in. So keep an eye on the euros this afternoon. We could get a nice spike on the euros, which would be lovely because I want to get out of some of these euro longs that I've stupidly got onto with the EA. But anyway, so news this afternoon we need to be aware of. ADRs so far today, good old Aussie CAD. Aussie CAD has been moving wildly over the last few days. So we've done 100 ADR on that. We've just taken out the highs there. I'm just about to get a reverse alert on M5. So this is, I don't know if the person that was in Telegram is in here this morning. If you are, hello, welcome. But somebody was moaning about the ADR indicator yesterday in Telegram, which is why I'm talking about it. It seems to me like basically every time it got to 100% ADR, they would just literally hit the button in the opposite direction and hope that they would become a millionaire. But that isn't how it works in trading, unfortunately. So with the ADR trades, just to clarify way that I use ADR, when we get extended on ADR and we are in line with the COT bias, i.e. if we were looking for short opportunities in Aussie dollar CAD, I would be going, yep, we've hit ADR today, and we've also got confluence of a level there where they're probably doing a liquidity run, so looks probably like a good short. And then I would look at RSI and see if we've got RSI extensions on the hourly or the 4 hourly to give me extra confluence to get into a position short. I don't just hit the button because it's hit ADR. ADR is a condition indicator. It tells you the condition of the market is extended already. It's done its average daily range movement already in the Asian session. That's all that is telling you. It's not an indicator that when this lights up, you just jump in for no reason whatsoever. It's just telling you what's going on in the market. So there you go. If our friend from Switzerland is in here, there is a full explanation in a video, and also I have probably somewhere in the region of 100 to 150 hours of video on YouTube explaining how I trade. And I do this twice a day and keep saying the same thing, but some people just don't listen. Anyway, rant over. So, nice yesterday's high sweep on Aussie CAD. This is obviously neutral bias at the minute, Aussie CAD. We didn't get a lot off of the CAD, off of the oil yesterday on the CAD, not a lot of movement. And I think obviously with what's going on with Ukraine and Russia at the moment, oil's a bit of an anomaly because there's a lot of pipelines obviously from Russia. We get 6% of our oil and gas from Russia. Other countries in Europe are dependent on them for around about 40%. So I'm not quite sure exactly how that's affecting the sort of market with normal oil stockpiles, which is typically obviously what will affect movement on the market, but we'll see. So we didn't get any movement on the CAD yesterday off of the oil news. So this looks like a fairly nice little short opportunity, and obviously just a quick scalp, quarter of an ADR, half an ADR, if you get the alert. Aussie dollar is a short, CAD is also a short at the moment, so there's no real bias on it, but we're not extended at all. So we've kind of done a profit take as well on this move, so we've put a 50% retracement in, so potentially this could be looking to bounce higher, but difficult to tell at the moment with the Aussie CAD. Aussie New Zealand, screaming through ADR at the moment, up to 125 nearly already. Just going to quickly see if there's any news. There's no news overnight on Aussie or New Zealand I can see. No. So this is just normal market movement we seem to be having in at the moment on the Aussie and the New Zealand. It's just manipulation basically. So yeah, nice hit there. We've got nice levels coming up on the Aussie New Zealand. This one did start to do its little drop, and obviously we've got into the area where we would typically find a bounce somewhere between the 24.72 moving averages. So potentially this is now starting its next leg up. Never know. Difficult to tell with this one, but I'm hoping and expecting the New Zealand dollar to power up more. So hopefully that's your new peak formation high. We've just put a new low in. So now we're pulling back to put the second leg down in. So that's what I suspect may be happening with this one. So this is just a pullback. So pulling back, obviously somewhere up to these highs, 125 ADR for the next drop down. So that looks like a nice little short Aussie New Zealand as well. That might well get extended. We should get extended. It's about to hit it actually. 125 ADR. It's going to lit up in a second. Aussie US. Just come straight off of ADR this morning. That one. Yeah, just come straight off of ADR. Again, US dollar, don't know what's going on with the US dollar at the minute. If we look at the US dollar, we had obviously that massive run yesterday and pullback, and it's powering up nicely this morning in the London Open. So it looks like there's still money piling in for US dollar. We got strong yen this morning. Yeah, looks like we got strong yen as well. So safe havens are still getting pumped. Aussie Swiss. So Swiss franc doesn't look particularly strong there or there. Can kind of ignore that one. Difficult to tell what's going on with the Swiss franc at the minute. I would say the Swiss franc looks pretty neutral. It looks like all the money's going into the yen and the US at the moment. So, so just be careful with anything against the US. I mean, this is a perfect one, obviously, because US is powering up. So obviously yours is obviously going to come down. So if we get that continued strength on the US today, nice short, potentially big short. So again, we could see some massive ADRs put in today. So nice hit there. You just got the alert on M5 on that. It's in line with COT bias. Again, exactly what I keep saying. It's a lovely looking trade because it's a 50% retracement of the previous move. We've hit ADR and it is in line with the COT bias as well. Yeah, it's just, that's confluence. Yeah, you're not taking a trade because it's hit ADR. You're taking a trade because it's a 50% fib retracement in line with COT and it's hit ADR. Confluence. That's what we keep talking about. So yeah, nice one there. Euro odd. Euros are short. Yeah, probably wouldn't want to long that. The EA's got me into some euros long, which I'm going to keep a very, very close eye on. I want to see what happens with the euro today. It's obviously not very happy, as you can see. Looking for a pullback. We got a little bit of a pullback on it, but not substantial. So, you know, you've got a very, very strong downtrend channel on this and a lot of the euro pairs at the moment. We will get some kind of pullback. It's just a difficulty at the moment finding where we're going to pull back from. Every time you think it's going to get to a level that it might bounce at, you get a bounce, as we did there. But it's a micro bounce and doesn't really give you any strength whatsoever, especially with what's going on at the moment. So I'd be wary about taking euro odd as a long today. Same with the pound odd. Pound is very weak at the minute. We've got lots of bad movement on the pound, which is strange, but I'm not quite sure why it's affecting us so badly, the pound. But it is. So at the moment we are obviously in a drop. It's being squeezed. So anything pound odd wise, if you look at the extensions, we're going to find we are extended across RSIs as well. So these are all good opportunities for longs. I'm just not quite sure why it's so impactful on the pound with what's going on. But anyway, very nice RSI extension. We're extended on the 4 hour. You know, you're going to get the pops on the pound. The pound will strengthen up. The Aussie dollar will weaken as well. So you're going to get the pops. You're going to get the movement that you need to get out on this one. So looks like a nice long opportunity for me at the moment. So that's the ADRs. We can ignore the weeklies and the monthlies. We're at the end of the month and the end of the week. Also, as well today, be prepared for more offloading with the funds because obviously it's the end of the month. They'll be looking to balance books, bank profits, etc. So, yeah. Right, RSIs. So hourlies, we're flat. We've got nothing on the hourlies yet. So this is mainly because we had lots of pullbacks yesterday across the board. So when we obviously get a pullback, anything that has been extended on an RSI, when it pulls back, obviously gets de-extended. So at the moment, we've got nothing that is reaching at the moment. So there's nothing to take as mean reversions on the hourlies. The 4 hourlies, everything was lit up like a Christmas tree, obviously, as you remember, and they've all unlit because we've had the reversions come in. So absolutely beautiful plays on these, huge extensions and textbook mean reversion. So they've all played out, obviously, which is why I banked so much yesterday. So pound odd is the only thing you've got as an opportunity at the moment. End of week, end of month, I'd be more inclined to just say manage the positions you've got and don't look for anything new today, really. But pound odd, very, very nicely extended. And obviously that's an ADR hit today as well. So good looking opportunity. Morning, Aseni. So yeah, good looking opportunity there for a long. Drop down M15, wait for a reversal alert. And just play the pullback on that one. So all looking good there. Indices and gold. Well, have a quick look at gold. Now, gold did the same thing as oil yesterday. We had that pullback, and it's pulling back a bit more today. So hopefully I haven't got this gold wrong. I've got tiny positions on it, so I'm not particularly worried. In fact, I'm just going to cover these just in case. I'm happy to take a bit of a loss on these at the minute. As I say, I had a good month, and these are kind of high-risk trades. If you're trading in this kind of environment, everything is high-risk, high-reward at the moment. So I'm happy to take a fairly decent hit on them in respect of getting a very nice reward if they go my way. But if oil does drop down below these levels, I suspect this is kind of a knee-jerk reaction to what's going on. So, and that means I'm going to be wrong. I don't think oil is going to come down, but equally, I do not want to get stuck in big drawdown on it as well. So, I'm just going to cover those if necessary. But I think we're just going to pull back and do this gap basically today. Gap fill. Gaps work across the board on everything. Yeah. So I think we're going to do the gap fill and then potentially hike today. So yeah, gold. We had a big spike on gold, which retraced 100%. So we had a nice A-shaped recovery on that. I wasn't expecting these to happen quite so fast, but they did. We've corrected that move. So continued just scaling into gold, I suspect, from here. That's probably what's going to be happening over the next sort of few weeks. Beautiful support bounce. So yeah, gold still along. Indices yesterday. It's a bit of a mixed bag yesterday. The obviously a massive day across the board. I didn't trade yesterday because I was obviously doing other things, doing extra videos and all sorts of stuff yesterday. So I didn't actually get a chance to trade yesterday. Quite glad I didn't, because I think you probably would have got quite chopped around. But we had a big movement down and back up again on the NAS. Gapped down and then dropped hard and then pushed back up again. So we are still bearish. We've put in the new low. This is the pullback. So potentially continuation downside today. Same with the S&P. We did exactly the same moves, obviously, on there. And the Dow. Now, the Dow finished with a nice hammer. And the Dow has had way more negative movement than the other indices. So this is due kind of a bit of a pullback, really. So you may see today the indices rising a little bit. But with what's going on and sanctions flying left, right and centre, I really do not know how it's going to impact the market. I can't see it being positive, obviously. So I'd still have a short bias on it. But the problem is, as you can see yesterday, you're going to get these massive runs. So you really need to be concentrating, I think, on the indices at the moment on trend bias. So if you're going to be trading lower time frames with indices, you really want to be using moving averages and tight moving averages like the 2050 to give you a good indication of what the actual trend is, and stick in line with that. Because when we're trending at the moment, when we're getting these big movements being put in on the indices, they are sustained. So think of these like the 24 and 72. Yeah. When we're in between the two, look for the lower moving average to be your directional bias. So strong trend bounces off the slow moving average, and weaker trend bounces off the slower moving average, faster trend bounces off the faster moving average. So at the moment, we've dropped below, so I would be looking for shorts. The danger, obviously, with any trend trading is you're going to get chopped about. Nothing you can do about that. That's the problem with trend trading. And obviously, most of the time, the market trends only 20% of the time, and 80% of the time, it's in a range or consolidation. But at the moment, we're getting really strong movement across the board. So that's kind of where you need to concentrate, I think, with the indices. And just keep your stops tight at the minute. Let me just get rid of those. So the main difference yesterday that we had was the DAX. The DAX did not survive. Well, it did survive, obviously, but it didn't do the gap fill, and the movement we had on it was very, very bizarre. It was massive price action, much bigger price action movement. Every candle was way bigger than normal, and it kind of floundered and just managed to get itself back up without filling that gap. So I'm kind of suspecting today we may come back up and try and do this. Where we'll go from there, though, I don't know. Obviously, all the other indices had big up days as well, but the DAX really didn't do what the others did from a sort of speed and volatility of movement perspective. So difficult to read at the minute, and obviously the DAX is the one that is going to get hit the most with the with what's going on in Europe, because obviously it's the Euro stock. So we've just got a potential resistance bounce there, but there is also a gap fill. So it's kind of, again, it's a 50-50. Is that what we were looking to do, or are we coming to try and get that done first? Either way, after we've done them, I think down. So tricky, very tricky, but I'm just not going to trade it today. I might have a go this afternoon. I'll see how I get on today. I've got so much work to do today on other things, mainly the indicators and stuff. So I'm finding it hard to find time to trade at the moment, which is why the EA is just doing it all for me. Mark, at the moment on the reversal EA, I have only the pairs listed on the set file. How do I know the best pairs to put it on? Do you have a list? No. You never know the best pairs to put it on. You need to just make sure that you're not overexposing yourself, basically. I mean, you can backtest the set files. The problem is with backtesting, and it's always going to be the problem, is that whatever's happened in the past has got nothing to do with the future. You can have amazing backtest results in the past, and then a war breaks out. You can have amazing backtest results in the past, and then the financial crisis happens. Same with COVID. You're going to get things where EAs just cannot adapt. You need to adapt. You need to change the pairs that you trade and how you trade based on what the market is doing, the market conditions. So there's no right or wrong set of pairs. The pairs that I've got it on are the ones that are listed. So you're talking about the H1M5 set file, I suspect, which I don't think I've got on here. Yeah. So, whoops. What have I done there? So the H1M5, those are the pairs that I run it on. Yeah. The reason those pairs are chosen is because, first of all, the yen, when it goes nuts, as we're seeing at the moment, when it goes nuts, when there is times of trouble, the yen will tend to squeeze harder than most and move faster than most. Therefore, with H1 and M5, you're going to get squeezed into drawdown very, very fast. So I don't really run it much on yens. The same with the Swiss franc. When the Swiss franc squeezes and goes hard, we can see it do 2 to 3 days of solid movement, ADRs and ADR pluses. Therefore, H1M5 isn't so suited. The reason I choose those is because we've got majors in there, like the pound US dollar, that move very nicely up and down on a regular basis, because they both power up and weaken across different sessions. You've got the pound London movement for the pound, you've got New York movement for the US dollar, and they will both move in both sessions as well. So you get good fluctuation. Therefore, when you get extensions on RSI, and as it's manipulated so much, you tend to get much more opportunities to escape those positions quickly. US dollar CAD is crossed because the Canadian dollar will have sharp movements based on, a lot of the time, oil, and oil is released every week. And obviously the US dollar goes up and down regularly because it's the most manipulated currency in the world. So that's a good pair to trade. Same with the euro US dollar. Euro not quite as good as at the moment, and the euro you're probably going to get into more squeezes on because it's incredibly weak. But Lagarde comes out and says something. We can see a 300% ADR move in the opposite direction. Yeah. So again, that works. Aussie dollar US dollar and Aussie dollar New Zealand dollar. Aussie US because we've got a cross between Asia and New York session. Yeah. The euro odd, again, we've got a cross between the London and the Asian session. Aussie New Zealand because those two move in tandem together and you tend to get a lot of accumulation and movement up and down in ranges, which is great for trading small time frames like M5. Aussie dollar CAD is a cross, obviously, which is fairly stable as well, because you've got two mineral deposit type commodity countries trading there, so they will tend to range a lot. The Euro CAD, I think that was to do with exposure. What have we got? CAD. Yeah, so I'm limiting basically the number of pairs, so I needed another one to put in there. And New Zealand dollar, US dollar, again, you're going to get very similar movement on those. So you can pick, as you will to the Aussie dollar, US dollar, because you've got an Asian pair against a New York pair. So that's the reasoning behind them, is to keep the Swiss franc and the yen out of the equation as much as possible, because they will squeeze hard in times of crisis, as we're seeing. So the more volatile pairs, you're going to get into drawdown faster. With 4-hour M15, it's not quite as important. Because a 4-hour extension means you've had a massive strong push, and you'll tend to get a profit take off the back of that. So the hourlies, though, you're getting in faster on smaller movements, so you just want to be a bit more careful with them. But there is no right or wrong. You pick the pairs that you like. I do get overexposed on this. So H1M15 does go into more drawdown than H4M15. Oh, sorry. H1M5 does go into more drawdown than H4M15 because obviously you're getting in faster and more often, and you'll get more exposed. But yeah, I mean, there's no real right or wrong. Exposure is the most important thing. If you get yourself exposed on 6 pairs in the US dollar and the US dollar goes absolutely crazy like it is at the moment, that's 6 times the drawdown you would have had if you just took one. So that's why I pick a limited number. But you know, it's up to you really what you want to run it on. I've got this also at the moment. If you can see, I've got it running on the Swiss yen at the minute. Kind of as a little bit of an experiment, and you know, it's doing okay. It's taken a couple of Swiss yen trades recently. There's one there. There was one a few weeks ago as well, I think, on the Swiss yen. I thought there was. Yeah, there you go. So you see this one. You see what I mean about the Swiss yen? This got into 4 positions. 1, 2, 3, 4, 5 positions. Because you will get pushes and squeezes happening more often on these pairs. So it goes into drawdown more. It's more dangerous to trade. So I limit it to 1 yen pair and 1 Swiss pair, and that's the obvious one to choose because they will power up at different times, or if they do power up at the same time, it means they don't go as far. Yeah. So if you've got times of crisis yesterday, prime example, what did we have yesterday pushing? US dollar going crazy, Swiss going crazy, yen going crazy. If you trade the Swiss yen and they're both going crazy at the same time, that causes an accumulation. H1M5, in, out, in, out, in, out. Yeah. Doesn't affect us, does it? If you were trading US dollar yen, you'd have a similar thing, accumulation. If you're trading the euro yen, the euro's massively weak and the yen powers up crazy, that thing is going to go like that. And when it's going to stop, you don't know. So it's a dangerous pair to trade. And in back testing, I found the yen pairs were the most volatile and the ones that did the worst. So I scrapped them from that. Just back testing. But again, it's got nothing to do with the future. I have no idea. You know, with what's going on in China at the moment, flying planes over Taiwan, you could find that they suddenly go, actually, we fancy Japan as well. And the yen might collapse. We don't know, do we? You just have to get into positions and then manage those positions. And that's what it's all about, is managing the drawdown. If you see this getting too crazy, start dealing with it. But 90% of the time, it'll obviously just do its thing and work. So we don't know. But yeah, but just limit your drawdown. Limit your exposure. And if you want to be super safe, just pick 2 pairs of each currency and just use those 2 pairs. And yeah, you may not get into many positions on it, but also you're not going to be overexposing yourself, and that's the most important thing. He says running the cot bias EA with 28 pairs. That's a bit of an experiment at the moment, but I'm willing to take the risk. Thanks, good to know. I'm running the same pairs as you covered there. H4 will also add some higher risk pairs to the higher time frame. Yeah, I mean, the higher time frame ones, anything you're doing on the 4 hour is going to be less risky. Yeah. So I mean, this is a prime example, the pound yen. That's a massive move. And what did I say yesterday? If you're in this, be careful and make sure you get out on a 38 retracement. Yeah, it made it. This is what you've got to be aware of. If you're going to get into trouble, worst case scenario is where you get out. And if worst case scenario means you make nothing, but you get out, you get out. It's better to make nothing than be in this now with it potentially going to do that move again. We don't know what it's going to do we? But, it's with H4, the moves, when you get the RSI extensions on H4, it's moved so much faster and harder than it has on H1 that you know that there's got to be an unraveling of that movement, because any speculative positions in there will be getting out. Anything that is non-speculative and long-term will not be getting out. They will be adding, which is why you're going to be going down further on it. We don't know the percentage of speculative as opposed to long-term positions. So therefore, we cannot predict where the pullback will go to. If it was 50% speculative, 50% long-term, you probably would have had a deeper pullback on it. But we just don't know how much is the bank doing hedging transactions and the bank doing speculative transactions to make profit. Nobody knows. Yeah, there's only 10 of them that move 80% of this, and you've no idea what they're doing. No one has. So you just have to play worst case scenario, especially in times like this. Obviously, you just got to be very on the ball. And it's better to take a quarter of an ADR profit than a half an ADR profit. If we get back to here, if you got back to here yesterday, and that is literally what you got. Hardly anything, but you wouldn't have actually got into many positions on this because you wouldn't have got many alerts anyway. So you just got to, it's at the moment you kind of want to be monitoring everything on an hourly basis, I think, because it's changing that fast. And if you don't like doing that, which I don't really like doing, then it's much nicer just to sit on your hands and watch this whole thing unfold. It's entertaining watching it. It's not entertaining being on the wrong side of it. So, yeah. Anyway, so from an opportunity point of view at the moment, H4, we've only got literally the pound odd. Everything else that we had yesterday on H4 has all kind of played out. So the Aussie CAD came down nicely. Aussie Swiss, we didn't get anything on. Aussie Yen, didn't get anything. Aussie New Zealand. Aussie New Zealand, we had long opportunities down there, which have all played out. Aussie US was short up there. CAD Swiss was previous. Actually, no, CAD Swiss was earlier this week, wasn't it? CAD Yen didn't hit. Swiss Yen, you'd found it very difficult to get in this one. I can't remember if I got into this one or not, but You had a 4-hour window basically to get into that down there, and it only just really touched. Not something I would have been interested in, but again, it's played out. Again, it's the same thing over and over again. 30 to 50% retracements is what you're going to get. The euro odd, obviously, that's the euro pairs are the ones which at the moment you're getting squeezed on if you're in them, and there's nothing you can do about these, which is why we've been trying to short these things only. Euro CAD extended, it's given some pullbacks, but again with these you need to get aggressive drawdown control on if you're in them the wrong way, and just try and get out of them as fast as you can. Euro pound, there's nothing on that one. Euro yen, so we've got the nice pullback on that as well. All these yen moves unraveled. Euro New Zealand, got an ADR on that. Basically, that's it. Euro US, nice ADR and a half on that, but again, it's not, it's the same as the sort of the pound yen at the minute. It's not getting back there. Pound, again, you had a move to get out of that position there. Pound CAD, pound Swiss. So all pullbacks today. So everything that we saw lit up yesterday is all kind of pulled back, but we're still looking heavy on everything at the open. But we'll see what happens. Obviously, the first 4-hour candle can be completely reversed, and then New York can take it back up. So we'll see what happens today. But again, very volatile times, very difficult to trade in at the moment. Just make sure if you can, you're staying in line with COT bias. That's probably your safest thing to do at the moment, because the COT bias seems to be right. With most things at the moment, and obviously with the US dollar and the yen, we're looking for both of those to continue to power up, although obviously the yen is the opposite on the COT, but we know that they power up in safe havens, so and that seems to be the case now that the invasion has started. But how much of this movement we're going to see continue, it's very, very difficult to predict. So still look for levels, okay? So any speculative traders will still be doing the same thing at levels, getting in and getting out. So support and resistance, supply and demand, they're all going to still work because all the speculative traders are using them. It's just we don't know what percentage really is still trading to make profit and what percentage is trading to do a runner with their investments. I was thinking about your 1% trading theory. I tried to explain this idea last year to trading partners. They cut me off saying I was a dreamer and stupid, but it's been working for me. What do you mean 1% trading theory? What's that? I'm not familiar with my 1% trading theory. Do you mean banking 1%? Yeah, if you mean banking 1%, yeah, 0.5% to 1% a day, you're done. What more do you need? Well, obviously you need 10% a day, obviously, because then you can get your Lamborghini that everybody else has got trading. I wish. I really want a Lamborghini. I don't know if I told you in the live room last week, but there's a guy around the corner from me that's got a Lamborghini. He's got a nice black Huracan tucked away in his garage. He lives in the same house as me, same style of house as me as well. Why haven't I got a Lamborghini? I'm obviously not doing it right. I haven't found the right indicator. That's the problem. That one that makes you a millionaire. Okay, so that's really all I've got for you this morning. There's not a lot out there, and if you are getting into anything, just be very, very careful today. Indices wise, as I say, it's not looking good. It's all looking very heavy still. We may well get some more pullback on these, but we were so extended from the 24 on these. It needed a pullback, but I'm quite surprised it was as big as it was yesterday. So I think probably what we saw yesterday was pretty much it. How far we'll come down today, if we do come down, difficult. But we've basically done the pullback, I think, and we'll see a continuation to the downside. So Look for shorts, but stay in line with the trend. If you want to be super safe on the indices, I would say just trade in line. Just look for shorts when you're below the 20-50 moving averages, and really just take bearish price action or reverse alerts if you're using that on low time frames to get into short opportunities. Get a Harley Davidson. I can't ride a bike. My mother told me when I was young, don't ever get a motorbike, they're dangerous. So I never did. I bought a Porsche instead, and then somebody crashed into it. Nothing's safe. Okay, so I'm going to be back at 2 o'clock this afternoon. I shall be watching everything unfold. As usual, keep your eyes on the news. I'm not sure there's going to be anything really that impactful that's going to come out news-wise. Missiles landing on Kiev, etc., is not really going to impact the market. It's happening, and we know it's happening. I'm more worried about new sanctions and potentially an escalation from other countries. That is the next step that will probably have a massive impact on the market. New sanctions coming out to do with banking, especially with SWIFT. If they do decide to block Russia from SWIFT, that's going to have a big economic impact on every country that uses it, which is the world, basically. And that will probably be very negative. They're trying as hard as they can not to do it, but that's probably the next step to try and bankrupt him. Not that that's going to happen because he's got too much money, but so yeah. And obviously, if there's any escalation from other countries, if he decides to accidentally step his toe into a NATO country or anything silly like that, then that's going to be the next big thing. So I just think you just got to, at the moment, play business as usual and just trade as you normally would, but with that extra air of caution, and make sure you're scaling in on positions very, very nice and far apart. And if you're getting into indices, I would say if you don't get any short opportunities, probably best not to trade it. I'd rather have a day where I don't take a trade because it just goes like that than a day where I'm trying to do that every time it does that. Short bias and moving averages. If you want to as well, you could use the 2472. They work really well on M5. Obviously gives you a little bit more of a buffer as well. Try it. I used to scalp 7220. And it worked very, very well. So you can use those moving averages as well. Right, so I will be back at 2 o'clock this afternoon. We'll do an overview of the market again. Friday afternoon is quite often a slow coach because London goes to the pub. But we'll see what happens. If you got anything you need in between, come in the Telegram group. I shall be in there. I'm working on the new EA coding this morning. There's some bugs in there that I need to get ironed out and some tweaks I need to make. So I will be on those this morning and hopefully get a new release out. I've also got to get the manual written for the new EA as well, as the video that I did yesterday. So I've got lots of other stuff to do. So with what's going on at the moment, this is the week to do it. Catch up on paperwork and stuff, and then reset for March and start again from scratch. But I've got the EA running as usual. I will be getting into H4 M15s and H1 M5s and managing them accordingly. So hopefully we get some decent movement again today and we can bank some more profit. Okay, so back at 2 o'clock for the New York session. Be aware of the news obviously before then at 1:30. Core PCE is coming out before then, so that will obviously have an impact on the US dollar potentially. So keep your eyes on that, and hopefully see you at 2 o'clock this afternoon. Have a good morning.